I'm Deepesh Patel, editor at Trade Finance Global. Today I'm joined at ITFA Abu Dhabi by Robert Besseling, CEO at Pangea-Risk. Robert, welcome.
Great to be here. Good to see you again.
Yeah, likewise. Let's jump straight into the topic of conversation because you're a regular on Trade Finance Talks TV. And we're going to be talking about your keynote panel session, the Middle East. Is the Middle East moving towards a new regional war, or is this fear just premature?
You know, when I was starting to prepare for the presentation, which I did at ITFA Abu Dhabi, everything was staring towards regional stability, regional growth, opportunity, peace, and of course the events that we recently saw. You started doubt and wonder whether your presentation is actually still going to be on track. There's a big elephant in the room, and we had to address that. And when you take a step back and look at how quickly events are moving, you need to be able to take a step back and say, where are you going to be the next 3 to 6 months? In the end, the long-term agenda is for Israeli and Arab normalization of relations. And that, I think, will come back on track. It will be delayed. It wasn't supposed to have been an imminent deal, but probably by 2024, early 2024, the important geopolitical agendas of the GCC and Israel, and indeed the US, will fall back into line. And I think we'll get back to where we were just a week ago.
Thank you very much. I guess transition from big oil-based economies has been a really key theme of this morning. How are the Gulf countries moving beyond oil?
You know, there's two real trendsetters in the GCC, in the Gulf Cooperation Council. The big one is, of course, Saudi Arabia. It's a rising economic giant, can't ignore when you're talking about the GCC. What they've done is they've implemented OPEC production caps, which are voluntarily implemented by most OPEC members. And that has, of course, slowed down regional economies. But it's done on purpose to allow non-oil sectors to grow. And it's working for Saudi Arabia, even though in 2022, Saudi Arabia was one of the fastest growing economies in the world. And this year, they'll probably barely avoid recession. But it's specifically done to avoid hydrocarbon dependence. If you look at Saudi Arabia now, its dependence on hydrocarbon is lower than the regional average in the GCC to its peers, particularly in terms of GDP and exports. Not yet in revenues, but they'll get there. And it's very much modeled on what the UAE did, which is the other trendsetter. The UAE has done exactly the same and focus on economic diversification, bringing in more services and manufacturing and logistics sectors. And we can already see that the UAE's economy, even while they've been taking themselves off a dependence on hydrocarbons, the non-oil sector growth has been remarkable, but also driving up the entire country's economic output. So Saudi Arabia seems to be on the right track if they follow the UAE's example on that one.
Thank you very much. So I guess outside of Saudi Arabia, what is the next frontier for the Middle East?
Saudi Arabia and the other Middle Eastern countries are increasingly they're taking advantage of their geographic centrality in the world. And the unexplored regions really for these countries is Africa. And they're looking to capitalize on their global south connections. They've all joined the expanded BRICS club. And for these economies to grow and to diversify their sectors, it is crucial to get more beneficiated trade going with African countries. For example, Saudi Arabia's state mining companies and state development fund have been actively buying rare earth metals from the Democratic Republic of Congo, various other African countries, almost as if they are starting to hoard these metals in anticipation of a one-day conflict or shortage over rare earth metals. So the fourth industrial revolution is completely anticipated in the GCC, and very soon, if you are looking to buy an iPhone or a computer, Saudi Arabia is the place to turn to.
Thank you very much. I guess sovereign debt is something we cover quite regularly with you on Trade Finance Talks TV, normally in relation to Africa, but specifically focusing on the Middle East. Are there countries that are facing sovereign debt issues at the moment?
Most of the Middle East, because of their huge foreign exchange reserves and continuing foreign exchange revenues, have mitigated their sovereign debt risks for the foreseeable future. But there are oil-producing emerging markets, particularly Iraq and Egypt, which are growing around 3 to 4% annually, but they're seeing foreign exchange shortages. And that is impacting their debt servicing, and it's impacting their imports balance. We are seeing, particularly in Egypt, non-payment situations in trade finance, in export finance, and also increase into sovereign level. So in 2024, it is key for Egypt to implement a fiscal austerity agenda and to completely liberalize their Egyptian pound currency. If they do that, just like the GCC countries and the IMF, which are the two biggest creditors for Egypt, if they do that, they can avoid that sovereign default scenario. It's one of the reasons why he brought elections forward to this year, to get the politics out of the way, and then next year focus on fiscal austerity.
Thank you very much. That was Robert Besseling, CEO at Pangea-Risk, joining us on Trade Finance Talks here at ITFA Abu Dhabi. Robert, thank you.
Thank you, Deepesh.